Hello, this is Mike with netpicks.com in the Options Mastery Program. In this video, I thought I would take a few minutes to walk you through and show you some of the trades that we took last week. Last week was a pretty tricky week, given that we had the Fed statement out towards the later half of the week, Thursday afternoon to be exact. So when you go back to the early part of last week, it was tricky because when you turn on any type of a financial media source, whether that be CNBC or Bloomberg or any type of a publication like the Wall Street Journal or Investors Business Daily, all you saw or all you heard were people commenting on what if the Fed does this? What if the Fed does that? Maybe it's a time to be in cash. Maybe it's a time to just sit on the sidelines and wait for things to play out. And the issue I have there is there was just a lot of people creating unnecessary fear last week. And if you're not an experienced trader, okay, if you're somewhat new to the markets, that can be a little intimidating. Okay, maybe you should be on the sidelines. Well, for me as a trader, there's not too many times where I want to be on the sidelines. I want to be active in the markets almost all the time, with a few exceptions. The reason that is, the worst feeling for me is to be stuck on the sidelines only to see a market make great moves back and forth, and I'm not even able to participate. So the one exception to that rule for me is I don't like to play through earnings season. Okay, I don't like to play individual stocks through earnings season. I'm more than willing to play ETFs during that stretch, but I just don't like that great overnight risk that you'll see with many of the big earnings events. But as far as last week goes, I viewed it as a potential great opportunity. Okay, the catalysts were there for some big moves. Now, I will be completely transparent here. I did want to be a little conservative last week. Okay, knowing that that catalyst was there towards the end of the week, I didn't want to jump in with both feet and go in with 100% of my position size, but I did want to have some exposure just in case. Okay, just in case we did get that great movement back and forth that we all wait for. Okay, so the reason I like to trade options so much is you have incredible flexibility with both position size. I mean, these are some of the most liquid products in the world that we're going to talk about here over the next couple of minutes. And you also have great flexibility with the types of strategies that we use. Okay, you're not just limited to buying and selling shares of stock. Okay, you're not just limited to buying long calls and long puts in the case of options. There's different types of strategies that we can use. We can use very small position sizes if we want to, and that's the approach that I decided to take last week. So as you'll see in a few moments, by me being conservative last week, I actually left quite a bit of profit on the table, but I'm completely fine with that because hindsight's always 20/20 in the markets. Okay, if we knew what was coming, if we could read the future, trading would be completely easy for everybody, right? We don't know what's coming. So going back to early last week, I was putting on position sizes that I was comfortable with. I was comfortable with the risk that I had on the table, and I had no problem waiting out the news. I was not influenced by anything I heard off of financial media. I was able to focus on executing my trade plan. I was focused on the price action on the charts, not what I was hearing from an analyst or from a money manager in the news. So let's take a look at the charts here next. What I'm going to show you here, this is our active swing trader. This is the system that I use each and every day in my own personal trading, and it helps give me a roadmap that I can follow. Okay, I'm not winging it. I'm not just placing trades, guessing, hoping for the best. I'm able to put on a trade based on this roadmap and actually have some statistics behind these trades. Okay, I can actually take these trades with confidence because I know that there's definitely a methodology behind what we do. So I'm not going to have time to go through each of our trades from last week. We had both winners and losers last week. It was actually a really nice week overall, but if I were to go through every one of the trades that I did take last week, that's going to take up most of your day, which I don't think you have any desire to do. So let's walk through a handful of trades. I just want to show a variety of names, a variety of types of trades. That way you can kind of see how flexible we can be with the system. So let's talk about Netflix here first. Netflix has been probably one of the more active names out there really over the past number of months. You go back a number of months, they had the stock split, brought in a whole new wave of traders that may not have had exposure to this name just because it is a lower price stock now compared to what it was earlier in the year. So, and it's also had a lot of news out on it. It's a very news-driven stock. So definitely a good product to trade if you're looking for a name that consistently makes swings both back and forth, which as an active trader myself, that's exactly what I'm looking for. And when I take trades like this on Netflix, I'm looking to be in these trades for anywhere from 24 hours on out to 2 weeks. That's typically a holding time for me. Um, there's going to be a rare occasion where I could potentially have a day trade mixed in there. And there's also going to be cases where I might be in a trade for upwards of a month. Okay, it all just depends on what the market is giving us and how active things are. So going back into last week, we're going to take a look at this most recent long trade here. This is the one that we just closed out of last week. So I looked at this long setup, and I can actually scroll back here so we can't cheat and see the outcome of the trade. But if I bring the setup to the far right hand side of the chart, you can see that I had plenty of time to get into this trade. When this trade first printed, it was not a situation where I had a matter of seconds to get in. It was just not a day trade. I had plenty of time to capture this trade. Okay, I typically come in a couple of times a day, typically 2 to 3 times a day. I typically come in for 5 to 10 minutes each time. That's a typical day for me as far as how I check my trades and how I look for new trades. So when I came in, I knew exactly where my entry point was. It was at 101.51. Once that trade started to print, you'll notice I had a couple of candles in here to actually place that trade. Okay, it was not a situation where I felt rushed at all. So I could actually go in, prepare for the trade, price some things out, take a look at the type of trade that I wanted to put on. And it was at that point that I made a personal decision that, all right, I'm going to take trades, but I'm actually going to be as conservative as possible. Just knowing the big news that was coming out later in the week, I wanted to be conservative. So the first thing I did is I cut back on position size across the board. Okay, on the names that I took trades on last week, I was in between 25 and 50% of my normal position size. Okay, just depending on the trade and depending on the product that I was looking at. I also decided to mix up the strategies. So if I wanted to be super aggressive, I would just go in and buy a long call here, potentially with a weekly option. Because I wanted to be more conservative, I looked at a vertical call spread, and I went out into the October monthly options. So one of the things that does, by going out farther in time, it's going to give me a slower reacting trade. That's going to give me a smaller potential winner, but it's also going to give me a smaller potential loss had this trade not worked out in my favor. If it happened to, hit a stop or, get choppy into the news last week, I was able to reduce some of my overall exposure by going out farther in time. Okay, so what I did here, let me scroll back over. You can see once that trade triggered in, once I hit my entry point, which I'm circling right here, that series of 2 dots, I bought the October 100-105 call spread. Okay, and I bought it for $245. So, very small risk. I mean, we're talking about a couple $100 here. Really didn't give me the potential for a home run trade. I was just looking for a single out of most of these trades, a single or a double last week. So what I looked at, I bought this call spread. And once I got into this trade, I just let the trade work. It was not a trade where I'm sitting there all day long tracking it from start to finish, as far as the session goes. I let the trade work. And again, it took a couple of days for this one to play out for me. Okay, so let me refresh my data box here. So we actually got in on the 16th. You'll notice that we did hit full target the next day. Okay, so it's great when these trades happen very quickly. Okay, but I'd be lying if I told you we were in and out of every trade in 24 hours. Okay, it was a great trade. We were able to get some pretty active markets before the news came out last week. Whether the news was leaked or, that doesn't matter. We're strictly focused on the price action on the charts. So once we hit that full target, we got that move to the upside. I sold it out for $3. Booked a $55 profit. It's a 22% return. It was a $55 profit per spread. Okay, I put the spread on multiple times. Okay, so small profit, but again, I was just looking to scratch out a profit last week because of the uncertainty. Okay, so it was just a really, really nice trade. Now, what is my plan for heading into next week? Well, we're currently flat, and the system has not given us a new setup. So we could actually go either way. We're in a good position next week. we can react pretty quickly. If the market sells off next week, we'll get a short setup pretty quickly, and that short setup will print on the chart, giving me my exact entries and targets and stops. If we do get a market rally, okay, we'll get another long setup here. We'll get a re-entry trade to print as well. So I feel like we're in a good position here over the next couple of days on Netflix. The next one that we looked at was Google. It was another long setup for us. It's this long setup that I'm circling right here. Our entry point was these series of 2 dots, the blue dots. Our targets up above, stop below. So my roadmap was giving me a long entry point. Was I a little hesitant early last week to get into this trade? Sure, because I knew the Fed statement was coming out. But again, I take just about every setup that comes, with the exception that I talked about earlier with the earnings. So when I got that long setup, I'm taking the trade. But what I did to put in some of my own personal opinion on risk and my personal opinion on what I felt the market was going to do last week, instead of jumping in with a full 100% position size with long calls, I bought another long call spread here. Okay, and let me go ahead and move this over so it's a little bit easier to see. So I bought the October 645, 670 call spread for $1,235 per spread. So what that has me doing, I'm buying the 645 call at the same time I'm selling the 670 call. That gives me a fully hedged position, and I'm talking about just over $1,200 per spread. So it might seem a little rich. If you've got a smaller account size, maybe this isn't a potential candidate for you. But remember, this at the time of this trade, this entry point, we're talking about a $650 stock. So this spread is giving me control of 100 shares of a $650 stock for a little over $1,200. That's pretty great leverage. Pretty happy with that. So this trade, you can see it wasn't the cleanest move to the upside. I mean, it wasn't one of those moves where, we're in and out in 24 hours. We were in for a little over a week. Okay, another typical holding time for me. That's typically what I'm looking for. So once we hit full target, sold it out for right around $1,500, booked a $263 profit, 21% return. Okay, so was it a home run move, home run return where we're booking a 200% profit? No, that wasn't what I was looking for out of last week. I was looking for conservative plays, trying to scratch out a profit, and we're talking about over $250 per spread. I put it on multiple times, so decent profit, all things considered. And now we're flat, very similar to Netflix. We can react pretty quickly to whatever the market gives us next week. We're going to get a long or a short setup to print on the chart within the next couple days would be my guess. So really nice trade there on Google. Amazon's another one. Given how volatile and bumpy this market has been over the past month, Amazon has probably been one of the strongest names on the board. Really has not been hit too much on the downside. I mean, it's not going to take much for Amazon to get right back up to all-time highs. So here again, another long setup. Okay, very similar to what we talked about on Netflix and Google. And here again, this was not a clean overnight move. We had to be patient here. Okay, we're in for a little over a week on this trade, and we had to survive this chop for a good portion of that trade. So I bought the October 520, 545 call spread. We're talking about $1,200 per spread. That trade, to break it down, I bought the 520 call, I sold the 545 call at the same time. That gave me a hedged position. When I say a hedged position, what that's meaning there is I know what my maximum loss potential is before I ever get into that trade, and I know what my potential profit is there as well. So I'm basically putting on a very safe position. This trade's not going to give me a 300% return, so I am giving up profit potential to put on the spread. But the trade-off there, I love this trade because it gave me a limited risk. I'm talking about a couple $100 of risk here. Okay, so fortunately for us, we were able to hit full target, sold it out, booked a $410 profit per spread, 34% return. Okay, again, I'm not showing you these trades that are knocking it out of the park. These are trades that I'm showing very realistic trades in a very uncertain market last week, and we're talking about scratching out a pretty decent sized profit, all things considered, last week. And now here again, heading into next week, we actually have a long setup, a new one that has printed, hasn't triggered in yet, but we know exactly where our entry point's at. So heading into next week, our entry point's right at 547.94. So if we rally up early next week, we could potentially be looking at another call spread. So what about some of the ETFs? So let's talk through some of the index ETFs. Let's talk about SPY here. So we had this long trade that I'm circling. This was the last one that we closed out of last week, right up to the Fed statement. In this one, we just went ahead and we bought the October 197 call for $478 per contract. Now, you could have turned this into a call spread, and you would have been able to cut your cost in half. If you put on the call spread, you're talking about about $240 per spread. But I decided to put on a few different types of positions last week. The main position that I had on was just the October 197 call. Now, because I went out to the monthly options, this was definitely a more expensive position. I mean, we're talking about almost $500 per contract. The reason I did that, it gave me a more conservative trade. So if this trade didn't work out, because I went farther out in time, it would have left me with a smaller loss. Okay, because those weekly options, they're great, but if those trades don't work out for you, they can potentially lead to some very large losses very quickly. So I went out farther in time, just giving me a more conservative trade. So sold this position out for $569 per contract. So it left me with $101 profit. Again, 20% return, 22% return to be exact. So you should start seeing a theme here. I mean, last week I was putting on trades where I was expecting between a 20 and a 50% return. That was my goal on many of the trades that I put on last week, and was able to fortunately hit that on many of these winners. Now, it looks like we had another winner here to the downside. Unfortunately, we were not able to capture this trade because of the overnight gap. Between Thursday and Friday, we had a big overnight gap to the downside, and we don't chase those overnight gaps. So unfortunately, it looks like a great trade, but we were not able to catch it because of the overnight move. Another one was on QQQ. This is the NASDAQ ETF. We played the move to the upside here with another October 104 call, $378 per contract. Hit the full target on the upside, sold it out, 30% return, another $112 per contract profit. Really nice trade. Here again, I mean, I'm hitting my goals as far as the types of returns that I was going for on these positions. So really nice trade to the upside. And we've got some potential here for some new trades, both up or down, depending on what we get early in the week next week. So we should be pretty busy, I would anticipate, heading into next week. The final one, then I'll wrap it up. I've got a whole list of names that we could go through, but I promised that I would keep this video short. So let's go over to bonds. The bonds, anytime you get any type of news out of the Fed, the bonds can be pretty active. So this is TLT. This is the ETF tracking the 20-year the 20-year bond. So we've got the short trade to the downside. If we go back into early next week, we saw equities rally. And that makes sense. I mean, we just got done talking about long trades on Netflix and Google and Amazon and the index ETFs. So when you see equities rally, oftentimes you'll get bonds to move inverse of that rally. And that's exactly what we had happen. We got this move to the downside here last week on TLT. So what we did to play that move, we bought the October 122 put, a little under $300 per contract. So we've got about $300 per contract at risk. We fortunately got a pretty quick move to the downside. We were able to book a really nice return here as well. We booked a $160 profit, 54% return, just a quick move to the downside. Oftentimes on the moves to the downside, if you might be asking why this one had a 54% return while my moves to the upside only had a 20% return. Oftentimes the movement to the downside leads to larger returns. Number one, those moves to the downside tend to happen faster. The moves to the downside, they're also typically followed or led by a jump in volatility. If you're long premium, if you buy an option and you see volatility expand, that's going to lead to those options getting more expensive. That's exactly what you want. So on the moves to the upside that we talked about earlier, on those call spreads and the long calls and the equity, the index ETFs, We got those moves to the upside, but we didn't get volatility to expand. We actually got the opposite. Volatility was actually contracting. And when volatility goes down, that's going to lead to smaller winners if you're buying options. Okay, so when we buy options, ideally we want the volatility to expand, and that's what we had happen here on TLT. So that's what gave us the larger win. So we're talking about $160 of profit here. So, I mean, all in all, not too shabby. I mean, we're talking about well over $1,000 of profit here just taking small positions. If you're just taking one contract or one spread position sizes here. I was trading multiple contracts last week. So we're talking about a decent size profit, and we wanted to be conservative. We were expecting a slow week. So the goal here, my point of this video is to show you can't get distracted by what the media is telling you. You can't be distracted by CNBC or Bloomberg. Okay, will I have those turned on sometimes through a big news event just to hear what the news is? Sure. But I certainly do not want to be influenced by another trader's opinion. I have to trade my system. Had I sat on the sidelines last week because of all the crazy talk in media, what if the Fed does this? What if the Fed does that? I'm missing out on, I just showed you. And we're talking about hundreds and thousands of dollars of profit because I'm influenced by somebody else. I stuck to my system last week. I took the trades as they were showing on the charts. I followed the roadmap that was printed for me. Did I get conservative? Did I reduce some exposure, reduce some of the risks that I usually take? Yes. So, I left some profit on the table, but I took risks that I was comfortable with. Okay, and it really paid off well for us. So it's been a really nice couple of months. It's been challenging because the markets, you're just throwing some huge historic moves back and forth, but there's just been a lot of profit, a lot of opportunity. So, make sure you've got your system in place that you can stay disciplined to, and try to do your best to ignore all the other distractions going on around you. If you're able to do that, I think you'll see your results really improve. So, going forward the rest of the year, I see it being pretty active. Next week specifically, I see another volatile week ahead, and there's a lot of opportunity there. So, make sure you're ready to go for early next week. So I'm going to wrap this video up here. If you have any questions, feel free to contact me directly, mike@netpicks.com. I'll be back early next week with another video walking through some potential new setups for next week. So I hope to talk to you guys here next week.